Great. So welcome. This presentation is how to create an automatic money machine, and it's finally solving the time versus money trade-off. And David said that this event had several themes, and one of them was time management. And I think for all of us, most of our lives, at least for an awful lot of us, we sort of trade time for money, and that's sort of understood. And what I think one of our challenges is constantly trying to figure out how to be more efficient than that with that. So if you're not exactly trading dollars for hours anymore, I think you should be commended for that. That's a really good step in the right direction. Trading is an interesting thing, and we tend to think that it takes a lot of time and effort to trade correctly, and most of the time it does. Just want to introduce myself real quickly. My name is Peter Schultz. I'm the founder of wealthbuilderpublishing.com and thewinningsecret.com. What we're going to talk about here in this event is the winning secret, and that's our options trading strategy. I think you're really going to like this. But if you're interested in actually building wealth, Wealth Builder Publishing, we get into they're not even micro caps. They're smaller than that. It's almost venture capital. I think they call them nano caps. So we go down to companies with a $10 million market cap. And you might kind of laugh when you hear that, but the upside of those types of companies when they hit are pretty amazing. I won't go into that now. All I'll say is I've made a lot of our subscribers millionaires and myself a millionaire with that strategy. But in the meantime, you need to have more cash flow coming in than you have going out. Otherwise, you don't have anything to invest. And so that is the point of this presentation. So in this event, this is an incredible 3-day event, and we're hearing from a lot of people that I have a lot of respect for. So these are really bright people, they're really smart people, and they really hone their craft. And I came to a conclusion a few years ago, trading and learning how to trade and being Johnny on the spot with your mouse, getting in at the right time, getting out at the right time, it's actually a fair amount of work. And that's okay if you're making really good money. If you're doing that work and you're not making really good money, if you're losing, it's very, very frustrating. And I think anybody that's been trading for any length of time has had those experiences where you're losing a lot of money and you're working really hard to do it. So I finally came to a conclusion, and that is that nobody really wants to trade. It's just a means to an end. What they really want is more money and the lifestyle that comes with it. So is there a way that we can make that a little less stressful? Is there a way that we can make that, more importantly, more efficient? So whatever time we do put in yields much, much greater results. So everyone wants a better life. We all share that. We all have that in common. But active trading often causes the opposite. When you are watching the markets, and I've been trading actively now for 25 years, and I just had to figure out ways that would work for me where I didn't turn into a nervous wreck. And, that the Fed says the opposite of what I thought they were going to say. And, the guys in the white coats have to finally come in and, strap me to a gurney, and haul me away mumbling to myself. It gets kind of crazy. I mean, if you've traded, you just do everything perfectly. You look at the perfect setup, you enter at the perfect time, and the trade still blows up in your face. So this is tough sledding. And I know everybody makes it sound super, super easy. And I get that. And I don't want to take away from any presentation, but it's just in the real world, it's sometimes a little more challenging than that. And maybe it should be, there's big dollars involved, there's big rewards. So maybe it should be challenging, but it's an interesting thing. I think with trading, like with other things, we have a belief, very strong and embedded belief, that the more work we put into it, the more effort we put into it, the more diligent we are, the more we're on it, the more we're up before the market opens, the more we're analyzing after the market closes, the better we'll get. And that, to a certain extent, is true. You really do want to hone your skills, but there is a law of diminishing returns in there where you can actually put in a tremendous amount of work and still not do very well. So one of the things that I figured out after many, many years of trading is that the probability of winning or losing is probably the most important thing to concentrate on. So in the beginning, when I first heard about options, and I had a horrible thing happen to me when I first started trading options, and I just want to see if you can relate to this. I won on my first 3 trades. And when you win with something that's highly leveraged like options, the thing is you put in a fairly small amount of money and you get back this huge amount of money. So after those 3 wins, I thought to myself, my goodness, this is the holy grail. I think my biggest problem in life is going to be to figure out what color my Mercedes Benz is going to be. And I'm just whistling a happy tune. I'm only I was young, this is many, many years ago. And I just thought, this is it. And then right after that, and I started betting bigger. And right after that, I had a string of losers and I lost my entire account. And you really, when that happens to you, I don't know if it's happened to you yet, but if you trade long enough with highly leveraged instruments, it probably will. And you have this conversation with yourself in the mirror where you're just going, idiot, idiot, idiot. How could I have been so stupid? So eventually, it took a while, but eventually I started shifting my thinking from how much money can I make to, okay, what is my probability of winning? Now, here's the really cool thing about options. Now, I don't know if this is kind of my specialty. I don't know if there's another instrument that offers you this, is you can go into an options trade. This is super, super cool. And you can see the mathematical probability of you winning before you ever make that trade. I don't know if there's another asset class that does that. I mean, if somebody says, hey, I got this really great duplex, it's a crappy duplex, but it's in a really good part of town, I think we should go in partners and buy this thing and fix it up and sell it. Before you do that, does somebody say, oh yeah, you have a 63.7% probability of making money on this? No, it's just your best guess. You're kind of looking at it and you're scratching your head and you're going, well, man, I sure hope I win. Well, once I figured out that options, which are based on a mathematical formula, a formula so powerful, so game changing that it won the Nobel Prize for the mathematicians that discovered it back in 1997. It actually they created this mathematical model back in 1973, and it actually made the options market possible, the modern options market possible. Finally, people knew what kind of a value to put on these options based on the time, based on how out of the money they were, based on the probability of them winning. Since they're based on a mathematical formula, you can instantly, at a good options trading platform today, see your probability of winning, which I think is amazing. So what I decided after losing, a fair chunk of money multiple times is I wanted to be on that high probability end of the scale. And maybe my trading and my life would start working out a little bit better. So here's an example of a trade. I've got a subscription service that you can subscribe to. It's not very much money for what you get. Really valuable, and so there's 2 things about this subscription service that are really nice is you tend to win. And that's in spite of what you know or don't know, or whether you're tall or short or green or black or blue or plaid or anything else. It has nothing to do with you. It has to do with the probabilities of the trade. And I'll just tell you how silly we can be sometimes. Is in the beginning when I first started trading, I thought that my edge, if somebody said, well, what's your edge? How are you going to make money? What's your edge? I'd say, oh, well, I'm smarter than the next guy. I'm quicker than the next guy. I'm this, I'm that. The market is nothing if not a humbling experience. So, I mean, I got shown very quickly that maybe I'm not quite as smart as I thought I was. Maybe I'm not quite as quick as I thought I was. And I decided what I needed is to get as much probability on my side. And I'm suggesting when I say this, I'm suggesting that's what you need, is to stack as much probability on your side as possible going into the trade. And I'm talking about probabilities that have nothing to do with how good looking you are or how clever you are or whether you got straight A's back in school. I mean, I want this to be so good that a human could do it, a machine could do it, a monkey could do it, and the outcome would be very, very similar. So let me give you an example of what we do. And if you're familiar with this already, that's okay. I want you to pay attention because you still might learn a few things. So what we're going to do here is of course, we pay attention to charts. Charts are important, but we don't get so many lines on a chart that you're totally confused. When you really get into technical analysis, Fibonacci, this and that, well, gosh, it wasn't this retracement, it was the next, it's just too confusing. So this is fairly simple. So take a look at Goldman Sachs here. This is GS. So we have an initial breakout here. So we have a stock that's in a sideways range for a long time, and then it breaks out one day. You can see that it breaks out right here. Well, that's a pretty bullish sign. And then what it does is old resistance, this line right here, turns into new support. So it starts bouncing around in here. And then we have another breakout. So here we have a bullish stock that is forming higher highs and higher lows. This is simple stuff. I mean, if you're into technical analysis, I'm sorry I don't have 10 million moving averages on here, but I found with technical analysis, actually the simple stuff works the best. Why? The market is a voting machine. Everybody can recognize a breakout. Everybody can recognize a head and shoulders pattern. Everybody can recognize a trend. So the more people that recognize a pattern, they will verify and validate that pattern with their own buying and selling. And that's why the simple technical analysis works the best. So we have a breakout here. This is a really simple thing. So it breaks out above where it was previously. So what we're going to do is we're going to fade that trend. We're going to go on the opposite side of the direction the stock is heading. We're going to sell a put. So we sell a put here. This is that 412.50 put. And because we don't want risk all the way down to zero, which is what you would incur if you just sold the put and did nothing else, we're going to buy another put just underneath it. We're going to buy this 410 put. That's going to result in a 60-cent credit. Now, I know you're probably familiar with leverage, so I'm probably preaching to the choir here. But if you're saying to yourself, Peter, 60 cents, I mean, that doesn't even buy me a pack of chewing gum anymore. What are you talking about? Well, you know that options come in 100 share contracts. So just one contract, the smallest amount you can buy, put $60 in your account, and maybe $60 doesn't do it for you. So we do 10 contracts, and all of a sudden $600 lands in your account. So you can adjust this for any amount of money you want based on the number of contracts. Pretty simple stuff. So let's see what happened here. So it went up like we thought, and then this day happened right here. You see how it went down like that? And, I was kind of keeping an eye on that. You don't necessarily have to, but I was keeping an eye on it. And, I saw this kind of downtrend. I thought, well, the next thing this thing's going to do is going to roll over and go right through our new support that we've drawn here. And I don't really want that. Well, I went ahead and closed the play. So we put it on way back here. When you see these two lines here, that's when we put it on, and we bought it back 5 days later. We sold it for 60 cents. We bought it back for 11 cents. So 60 minus 11 cents is 49 cents. So our risk on this thing from the very beginning, from when we put on the trade, was only $2.50 minus the 60 cents, so it was $1.90. So to figure out our rate of return, we divide the 49 cents into the $1.90, and we get a 26% return for 5 days of time. Now, just to let you know what our typical time frame is we will typically, I come out with the update on Tuesday night. We place our trades Wednesday morning, when the market opens. And so our expiration is the following Friday, typically. So that's 10 calendar days of time that we're in the trade. Now, 2 of those are weekend days, so nothing bad can happen. Those are just kind of free days. And sometimes if the volatility isn't very high, if we're not getting very much for time value, I'll go out 17 days. So it's either going to be 17 days or 10 days. Here's the trick. You can let it go all the way to expiration. You have over an 80% chance of winning mathematically. and there you can just take a nap and do a little Rip Van Winkle, and it doesn't matter because you don't have to worry about when to exit the trade. This is the best lifestyle trading strategy I've ever seen. You don't have to watch it that close, and you never have to worry about when to exit because that all happens for you. It happens because expiration is coming. This is that finish line, this vertical line that I draw here is the finish line. That's when it's all over. And all of this entire trade, everything that we talked about right here, is going to go away with or without you. It'll just disappear. The cool thing about this strategy is you collect your money up front, and you always get to keep that premium, but you find out how much of it you're going to keep by expiration. So that's kind of a cool thing. So the point of all of that is, if you're calculating your returns and you're saying 25, 26%, even if now that's in 5 days, but even if you let it go to expiration and it was 10 days or even 17 days, if you said average even 2 weeks of time, and you're getting 25% about every 2 weeks on multiple trades, figure that out on a calculator, and I think it's going to blow your mind, especially for your probability of winning. How do we know we have a high probability of winning? Well, this particular trade, this is Goldman Sachs, so we go back about the same distance as the trade that I just showed you, and you look under here, and you will see, let me just move this here. You will see that your probability of winning, this is probability of being out of the money, your probability of winning on this particular trade is 85.36%. Now, I want to make an important point here. That is your mathematical probability of winning based on the options trading formula, the Black-Scholes formula, or whatever modification of that the trading platform is using. So over an 85% chance of winning going in. And we do that on every trade. I don't typically do a trade that's less than 80%. And I just have a quick question for you. So, and there's very little trade management. This is really the likelihood of making money is good. But the second half of that is, I don't want to monitor my trades. I don't want to look at them all the time. I do because I have a service, but I don't want you to have to. I don't want to create something where we have to be watching the market every single day, and every uptick or downtick gives us an ulcer. To me, that's not a good life. If you enjoy it, if you're one of those people that just wants to watch the market all day and it's moving around and you're making really quick moves and you're outfoxing everybody, and that's your life, that's your style, fantastic. I want to be out hiking, having fun, climbing mountains, hanging out with my friends, doing almost anything but watching this crazy lunatic that is the market jump all over the place. So I want not only a very high probability of winning, but I want it to be as automatic as we can possibly get it. So we start by really stacking the deck in our favor. So here, in this case, we have an 85% mathematical probability of winning, but are there other things that we can do to help stack the deck? So this is our mathematical probability, which you just saw right on the platform. The other thing is the chart. So that mathematical probability doesn't take into consideration this breakout that we just saw, or this really great chart pattern. And what the stock is actually doing. So if we put this technical analysis, just some basic technical analysis, nothing fancy. If we just, sell puts on stocks that are going up and we sell calls on stocks that are going down, if we just did that, would that increase our probability of winning? Of course it would. Number three, now what if we traded in the overall direction of the market? So in other words, we've got that massive tailwind in our favor. So let's say the S&P 500 and the NASDAQ and the Russell 2000 are all going up, 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 up. Would it be smart to find a stock that's going up? Instead of bucking that trend, let's just get on that big wave, that big escalator that's going higher and ride that. We already have a mathematical probability. We already have a chart of that particular stock going with the market, and then we have the overall market with us, massively increasing our probability. Number four, here's a really cool thing about this. When you sell an option, and let's say it's got 10 days till expiration or even 17 days till expiration, every single day there's time decay on that option. So when we sell it, we're selling way out of the money. So every amount, every penny that we take in is time value. So that time value, say this 60 cents, or on a $5 spread, we typically take in $1. All of that time value is like an ice cube on a hot summer day. It's constantly melting, 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 because we know, based on options theory, that at expiration, that time is going to have zero value. So the game that we're playing is we collect a lot of money, and then that money gradually melts into our account the closer we get to expiration, until finally the whole trade goes away, it all expires, and we just keep the money. It just takes up permanent residence in our account. Pretty cool. But the point of this, and listing these 4 things here, is aside from the mathematical probability, aside from the built-in probability of doing this trade, is there some simple things that we can do right at the beginning of the trade to massively increase our probability? And the answer, of course, is yes. Okay, so this is what I wanted to show you about time decay. So in the old days, when I first started trading options in the mid-90s, long time ago, and when you find something that makes you money, you kind of stick with it. So I'm still trading them all these years later. So back in the day, there was only one option expiration per month. That was the 3rd Friday of the month. And so they would always show these time decay charts in monthly terms. So this is 4 months out, and you can see the time decay is fairly slow. It's fairly flat. Yeah, a month goes by and you lose a little bit, but you don't lose too much. So this is the 3rd month out right here, and as you can see, your time decay is a little bit steeper. This is your 2nd month out. And a strange thing happens is, and this is fairly accurate here, is right before this option becomes front month, the time decay steepens up a little bit. Now, here's what's cool, is in what they call the front month. So there's just 4 weeks left till that option expires. The time decay is so incredibly steep. Now, here's where we sell. And this is, we're always looking for the perfect point on the time decay curve to sell. And that varies a little bit with whatever implied volatility is going on out there. But we've determined that this 17 days to 10 days, right in this phase right here, right in this time period right here, is actually the perfect time to sell. Why? Because you actually still get, especially if there's a little volatility out there, you still get a really nice premium. So you collect a pretty decent fat premium, but every single day is time decay on what you collected. And so that all that time decay is melting value into your account. Now, I want you to think about, and maybe you trade options yourself, and if you think about the 90% of the people that trade options out there, they're always wanting to buy a lottery ticket. So they want to buy an option, oftentimes in the same period that we're selling it. And they buy a very cheap option, hoping some incredible thing is going to happen with this stock. It's really going to head in their direction. And this 50-cent option is going to turn into $5, and they're going to make this just gigantic amount of money. And they're going to be able to brag to all their friends, and they're going to have a huge pile of cash, and it's going to be really, really cool. What they don't, and listen, I can't put those folks down, because when I first started trading options, I did the same thing. I thought, oh, this stock's going up. It's going to keep going up. I'm going to buy these calls. I'm going to make $1 million. And a strange thing happened. Like the stock could have been going up forever, and the minute I climb on board, it suddenly reverses. And I just found I was losing so many times, and I thought I was being personally persecuted by the markets. I thought I was being beaten up, till I finally discovered probability. And I realized that when I bought these cheap options, hoping something nice was going to happen, I was buying a 20% probability of winning, maybe a 25% probability of winning. Of course, I was going to lose most of the time. With that level of probability, it just makes sense you're going to lose, even if you're really smart, and even if you really know how to read a chart, and even if you're really clever, and even if you've really done well on a lot of the other things in your life. If you're buying a 25 or a 20% probability of winning, the math tells us you're going to lose most of the time. Conversely, if you're selling an 80% chance of winning, or higher, in this case with Goldman Sachs, an 85% chance of winning, you're probably going to win most of the time, particularly when you have this time decay curve on your side, where every passing day stacks the odds actually further in your favor. So how to create an automatic money machine. So this is great. And that everything that I just said was really an introduction to this part right here. So I can show you how to automate your trades, so you never have to pay attention to anything. But what good would that do you if you didn't already have a really high probability strategy? So the first thing, the thing that makes all this automation work, is having a high probability strategy in the first place. You know, we trade with such high odds of probability of winning that even if we lose, and you can lose and you will lose, and the way that you lose is the stock turns around and it goes against you and it hits your sold strike and it threatens your spread. That's how you can lose money on this. But here's what's cool, is even when I lose on a trade, I go, you know, it doesn't matter, because the probabilities are so high in my favor of winning. I just jump right back in there and just keep putting on trades. And I know the math will make us money in the long run. So with that all said, and now that you have a super high probability strategy of winning, how can we automate it so we're not in there clicking the mouse all the time? We're not really having to watch our computer. We can go to a job, we can raise a family, we can do fun things, we can go to the grocery store, we can get up to go to the bathroom without coming back and finding out our entire account's been wiped out in the 2 minutes that we were gone. That's not fun. I want to set something up where money is coming in without me paying attention. Now, I don't know about you, but to me, that sounds like some kind of a moral victory. Like if you can get money coming in that you're not like breaking rocks with a sledgehammer down at the quarry for, that's pretty cool. So how do we automate it? So what, first of all, I'll tell you that the broker that I use, and the broker most options traders use, is Thinkorswim. And the reason is because they used to be a broker, now they're a platform. TD Ameritrade bought them, and then Schwab just bought TD Ameritrade. So this platform is available at Schwab. It's fantastic. They put zillions of dollars into the programming to create the best platform on the planet. And the best platform means that we can automate our trades really easily. Combine that with this high probability of strategy, and you have a really good chance of making money while you're taking a nap. So one of the most important things that we want to do is automatically limit losses. So once again, I kind of shifted as I got a little more mature, and I started shifting from going, how much money can I make, to how much money can I lose? Because these option strategies are so naturally profitable that if you can just limit the downside, limit the losses, the profits are going to really take care of themselves, because there's so much money to be made. So here's what I want to point out, is options theory tells us that if the underlying touches, the underlying is the stock or whatever it is we're trading, could be an index. If the underlying touches our sold strike, the cost to close will be half. That's supposed to be half the distance between the strikes. Or in this case, see, if we're selling a $2.50 strike, the cost to close would be $1.25, as opposed to the entire $2.50 if the stock goes to expiration past all of our strikes. So the solution is to place a stop right at the sold strike to cut our potential loss in half. So let me show you how we do that. So our sold strike is this strike right here. So even though the stock is taking off, sometimes stocks do funny things. And sometimes the the FOMC meeting isn't what you thought. Sometimes the economic report coming out that morning isn't what we thought. Sometimes the market just completely wakes up one morning and just, goes the opposite direction. So let's say this whole thing rolled over very quickly and went right down. So the point that I'm trying to make is if this stock went through both of our strikes all the way to expiration, we would lose the entire distance between those two strikes. In this case, $2.50. And you can see that that's the distance between our strikes, and they would take that right out of your account. Now, if you already collected 60, of course, you can only lose $1.90, but still, that's a pretty big hit. So what we're going to do is we're going to put an automatic stop right here, sold strike, where if Goldman Sachs touches this 412 price, if it touches that, we're saying automatically close this trade for me. With Thinkorswim, we can very easily enter those orders, and those are good till canceled orders all the way to expiration. So instead of losing $2.50, it only costs us $1.25 to close this spread. Now, that's a pretty good deal. That's half price, but keep in mind, we already collected 60 cents that they can't ever take away from us. So the most we can lose is 40, 50, 60 is 65 cents on this particular trade. Because we already took in the 60, that's a plus. This is a minus. We subtracted this from the 60 from the $1.25, we get 65-cent loss. And that's getting really close to a 1-to-1 ratio because we took in 60 cents on this thing. So the reason a 1-to-1 ratio was such an incredible accomplishment is, keep in mind, we had an 85% chance of winning on this trade in the first place. So to get that high of a probability and still have a profit to loss that's equal, that's 50-50, boy, that's a pretty good accomplishment, probability-wise. Okay. Let's see what else. So automatically, once we're filled on the trade, we enter an automatic stop at our sold strike. So that's just standard. The minute you get filled, you enter the stop, and that's what allows you to walk away. So two things are going to happen if you just don't do anything else. I mean, literally, if you slipped on a bar of soap in the shower, hit your head, went into a coma, there's only two things that can happen here. Either the trade goes all the way to expiration and it expires, and all your options are at that point worthless, which is another way to say maximum profitability. You made the full amount. So either that's going to happen, or the stock's going to turn around and it's going to hit your sold strike and you're going to get stopped out. Those are the only two things that can possibly happen. So that's pretty cool. That gives us a lot of peace of mind, and it allows us to walk away from this trade. Okay. Now, I'm going to show you real quickly how to enter these automatic orders. So we set up a trade right here, and what I want you to do, and if you're familiar with this platform, that's great. This might be a good education for you. If you're not, the reason I'm showing this is so I can show you how simple this is. You just click this little gear icon right over here that nobody seems to know about. You click that, and then this next screen comes up. It gives you a screen with a lot of options. So since we sold this spread, we are going to enter buy up here. Instead of a limit, we're going to put in a market order. And that means just if our sold strike gets hit, we're going to buy it back at whatever it is. At time in force, instead of day, we're going to put in GTC. So that's good for the entire length of the trade. And down here, we're going to put whatever symbol it is. In this case, it was GS. The method is, you take notes if you're currently trading and want to figure this out on your own. We put in mark, which is halfway between the bid and the ask for the method. Our trigger is the price. And we're going to want to buy this back at whatever our sold strike was. And we're going to enter that. We're going to hit our enter key twice, and then that shows up down here in this part right here, and then we are going to click to proceed to the next screen, and that shows all of our things that we just talked about. We're going to buy this. It's going to be a market order, good till canceled. This is our symbol, and we're going to enter mark here. And this is important on this trigger is since this is a bullish play, we're going to hit it at equal to our sold strike or less than our sold strike. And that covers you in the case of a gap. You can still get out. We enter all that information and we're ready for our next screen. And I just want to say the reason I'm showing you this is it's actually really quick. Once you know what you're doing, I literally enter these orders in about 30 seconds. And then I know I'm covered on this trade no matter what happens. It gives you exactly what you said. You look this over, this order description by one vertical, Goldman Sachs, and gives you the date, gives you the strike prices, market order, good till canceled, and Goldman Sachs at or below or sold strike. If you like that, you enter that order, and then you're good. Then you can walk away. You've created a big part of automating this entire process. Okay, now that we've got an automatic stop at our sold strike, only one of two things can happen. Either the trade goes to expiration at full profit, or we get stopped out at half the cost of having the spread completely overrun. I just want to make one more point. Well, let's see. Maybe we've got that on our next screen here. And you have an 80% chance of winning built in on every trade. So if you're thinking to yourself, well, Peter, I thought you said this was an automatic money machine. And here you're having me enter orders and I'm clicking my mouse and my goodness, my index finger's getting so tired. What are you talking about with this complete? Now, it is pretty automatic. Once you put on that order, you walk away and either you're going to, win or lose. The odds are totally in your favor. You really don't have to watch it much. And most of the time you're going to win. So there's one more step here, a little more complex. We can show it to you if you're really interested and decide to come on board. But you can set up orders, and these are called OC or O orders. That's one cancels the other. This is the capability Thinkorswim has. Where you're looking at Goldman Sachs and you're thinking, this looks like a pretty bullish trade, but I'm not entirely convinced. And you say, if it does break above this resistance level, if it did that, I would want to automatically sell a put spread below it. Well, Thinkorswim has the capability of entering an OCO order where you don't even place the trade. You enter your parameters, like if Goldman Sachs breaks above this certain level, automatically sell this put spread. And it'll also automatically, you can put in the same orders to set your stop or let it go, exactly as we've talked about here. But you don't even have to, it's an if-then. Like if this stock breaks out, I want to sell a bearish position. You can put on 10 of these if you want. And all these little money traps sitting out there. Or if the SPX breaks down, if the rut breaks down, if it starts to break below this level, I want to sell these call spreads. You can set those up on a Sunday afternoon if you want for the whole week. Take about a half an hour or an hour, whatever you want to do to look at different trades and enter this information. And you can set yourself up and really create a completely automatic money machine. Now, one of the great things about this is it not only frees up your time, but you don't have so much of your emotions in there. Oh gosh, I hope my horse wins. It's in the lead. Oh my gosh, this other horse came from behind and now I lost my money. You get rid of all those crazy trading emotions that most of us human beings are not set up for. This is why I love automating our trades. Now, on the subscription service, I come out Tuesday night. I tell you exactly what to enter we do 2 trades a week. And you can just enter those casually Wednesday morning or Tuesday night if you get the email in time. They usually come out a little bit late. So most people enter them Wednesday morning. Pretty easy. You don't really check to see how you did until that Friday's expiration or the weekend or whatever. Pretty nice. But I just want to give you the mechanics behind it to give you some confidence in this system so that you can see you really do have things working in your favor. And that's whether or not you've traded for 20 years or not. It's just the math. So this is the only strategy that I've seen that hands you an automatic mathematical expectation of winning. This is our website. If you decide to come to Wealth Builder Publishing, this is what you'll see. And that mathematical expectation of winning is all you need to make a lot of money fairly quickly, consistently, and safely. These returns tend to build on themselves. Now, most investors would be happy if they made 25% in a year. They'd be bragging to everybody they know. We typically make that in 10 to 17 days, and we're doing it with 2 trades. So these wins tend to kind of stack up. You can actually really accumulate some money. And of course, we always have stop losses in there to make sure things don't get out of hand, even in crazy markets. So the problem is this is only if you know what you're doing. Now, if you got enough out of this presentation to do this, that would be wonderful. I would love that if you went out on your own and really started increasing your probabilities of winning. If you'd like to know a little bit more, I put together an educational package, and it helps you start off profitably and stay that way. It's important to have some wins right out of the bat, off the bat. So the name of this package is called The Winning Secret, and it's to more income more often. And it includes a lot. I throw like practically the kitchen sink in there. And I just want you to know that I used to sell this when we first started presenting it. I was presenting it to people that were on vacation, that traders actually, that were on cruise ships and everything else. And it was so darn effective, and it was so revolutionary back then. Nobody had ever heard of this, that we sold this package for $2,500, and people still trade it. They still love it. They consider it money well spent. Not nearly that much today. I'm going to give you a deal that's going to kind of blow your mind, but I just want to tell you really quickly what you get. 161-page downloadable ebook, tells you the theory behind the whole thing, why it works so well. I've got a really fast-paced, entertaining 10-chapter video series where you can hear and see exactly what to do. I think you'll like these videos. We made them just not that long ago. They're really great. You'll also gain access to all of our archived webinars and video tutorials, and you'll have access to all new editions for life as an owner of this package. It's a one-time fee. It's the best education I've ever found on this subject. It's fantastic, and you pay one time. It's not $2,500. It's a lot better deal than that. And then also, and you'll see videos that show you how to set up automatic orders. That's what we've talked about today. Go into more detail on that. So automatically trap profits, whether you have time to watch the market or not. And then we've also got, separate to the education, we've got a subscription. That's $97 a month, and you can get a better deal if you want to go 6 months or a year or whatever. But you get 2 new high probability trades every week. And I'll show you exactly where to sell your spreads and exactly how to sell them for the possibility of maximum gains with minimum losses, minimum risk. Plus, I'm going to give you an extra 10-module video course specifically on trading the weeklies. Weeklies are the best thing that ever happened to options, in my humble opinion. They started to roll them out in 2012, and now more and more stocks and indices are having weekly options every week or every year. And they're great because you can pick your point on the time decay curve to get maximum time decay. Heck, you can buy and sell the same day if you want to. The S&P 500 now has expirations on Mondays, Wednesdays, and Fridays. So you can generate a lot of paydays doing this. In addition, we all know the best way to learn is through one-on-one education. So included in this package is a free one-on-one orientation to make sure you get your account set up the right way and know how to take the best advantage of this new strategy. If you've never done this before, you're going to want to get an account at Thinkorswim. There's certain do's and don'ts on how to open that account. And I don't want to just send you a little email message. I'm going to have Deanna here walk you through this on your computer. She can see what you're seeing. She'll tell you what to click, what to check, exactly what to do to get started right. I really believe on one-on-one education. And that brings us to Alicia. I live in a college town, great university there in Southern Oregon. This gal here graduated in the top of her class in finance. I'm really proud of her. She's super, super sharp. We trade option strategies back and forth. She's really into it. She's our options coach. You'll get a 45-minute personal coaching session with Alicia. These sessions are incredible. So we sell them. You'll get one session included. I guarantee you're going to want more once you get your one. But we sell them in 3-session coaching packages and 8-session coaching packages. And we've had people that have bought 8-session coaching packages back to back, like 3, 4, 5 of them, 8 sessions, 3, 4, or 5 of those. Why is that? Do you think they're having trouble figuring out what a call and a put is, or what in the money or out of the money is? No. Alicia's really good at finding opportunities in the market to take advantage of and profit from. These people take these coaching sessions, they learn a tremendous amount, but here's why they keep signing up for more. They're making money. Now, obviously, we can't guarantee you're going to make money, but you get together with somebody of the caliber of Alicia, and you're probably going to make money. That's why I give you one for free. I think once you see the value, you're gonna want more. But I'm going to throw one in with this package. Nobody does that, by the way. I mean, nobody for this price. You're not going to believe the price when you see it. So go to worryfreeprofits.com. It's all set up. The whole package is set up for you now. It's such a good deal. I'm not going to say it right here. But if you go to this website, if you click the link, you're going to get everything in the educational package. You're going to get your first month subscription to the service. You're going to get your orientation with Deanna, and you're going to get your coaching session with Alicia, all for a price that you're not going to believe that we can even do this. So go ahead and check it out. And in the meantime, we got just a couple of minutes left. You might be skeptical. You might want to know what's going on. You can ask me any questions you want. I've got a full screen here. So actually, let's see. Can I see the chat? Yes, I can. Great presentation. Appreciate that. Want to leave a little bit of time at the end here if you guys have questions on how this works. And you can ask the tough stuff. What happens when a stock goes against you? What happens when the market goes crazy? What happens if we're in a bear market? What happens if we're in an economic downturn? This works in all those different markets. Sometimes I think it works better in bear markets than bull markets, because your volatility is so juiced. Those options are so darn expensive when the volatility steps in there. We can take advantage of that to add even an extra layer of safety. We can also usually collect a little bit more money to make the trade more profitable. How are we doing? All right. Hopefully that helped you. I think trading is not just about making money, but it's also about creating a lifestyle. And I think doing this as hands-free as you possibly can is actually not just better for your peace of mind and your lifestyle, but I think you'll be more profitable if you do that. I think the biggest trading houses in the country now, the Goldman Sachs of the world, the Morgan Stanleys, they're more and more doing algorithmic trading because they've just found that trading is a little bit tough on a human being to go in there and do every single day. So they find they make more money with this automatic trading. And that's kind of what we've tried to set up here with just a couple of mouse clicks, where you just don't really have to monitor your trades so closely. David? I think that's about it. I think I've just about wrapped up. If we don't have any questions, I'm willing to kind of conclude, other than to say that we've been doing this for, gosh, since 1998. I don't know what that is. I think that's over 25 years, very successfully. We've got a lot of people that have been with us for, gosh, a decade or more. It's not because they don't know how to do it. It's because they appreciate having 2 really high probability of trades handed to them every week that they can just put on without having to worry about it too much.
Yeah, great presentation. So we have a few more minutes left. If anyone has any more questions.
I'm getting some good thank yous, so I appreciate
Yeah.
that. But other than that, we've kind of concluded. You get a lot for what it is. I encourage you to just take this few minutes and go to the offer and check it out. A lot of the time, when the speakers are right back to back, there's not a lot of time to do that. So just take a moment and see if it's right for you. We'd love to have you on board. We give you a lot of personal attention.